heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, China tech stocks on a tear after Beijing's push to boost growth.
And the CHIPS Act gets a boost too, with a bill headed to Biden's desk that cuts red tape.
And we discuss all things M&A with Citigroup's head of tech deals. But first, let's check in on these markets. And we start with the move of the day, Ed. It is China stocks. It is China tech stocks. And we shine a light on the Golden Dragon Index here. We're up more than 6%. What does that mean? It is the biggest move in more than a year, and we're up trading at the highest level in more than 3 months. Stimulus to the Chinese economy. It helped some of the key names that you're watching.
Yeah, and understandably, those two key names are Alibaba and JD.com. E-commerce focused names, but also multifaceted tech companies. Actually, two of the names on the index in positive territory year to date. Many of them are not. We will go to our reporter later in the hour to talk about the impact of stimulus on China tech. I'm also looking at chip stocks at the index level. The SOX is up for a second day so far this week. Intel, what might happen to it, is dominating headlines, but there's also some news, Kara, about progress, I'd say, about onshoring the industry here in the United States. Bring us that story.
Yeah, let's dive in, because the US House approved legislation that would exempt some chip manufacturing projects from federal permitting requirements. It's a bid to speed up the build-out of the US semiconductor industry. Bloomberg's Mackenzie Hawkins joins us now. So what, they don't have to tick certain environmental boxes?
Right. So whenever projects get money from the federal government in excess of $2,000, which every chip company that's getting money from the Biden administration is getting well north of that, they have to go through the National Environmental Policy Act permitting process, which basically requires all federal agencies to review the environmental impact of their major actions, and also opens up projects to significant litigation. There's been concern in the chip industry from companies like Intel and Samsung and Taiwan Semiconductor Manufacturing Company that this could produce months or even years of delays on projects that the companies and the Biden administration have said are critical to national security. So the bill that the House passed yesterday, it passed the Senate last year, so it's going to Biden's desk, would exempt some of those projects from federal environmental review. They'd still have to go through state and local permitting processes, which companies say can be a headache. Environmental groups say are bedrock climate law. But this is a significant red tape cutting at the federal level.
Mac, what you do so well for our audience around the world is that there's billions of dollars coming from the CHIPS Act, and lots of names on paper sound to benefit. But building a fab takes a long time, and it takes all that money. Is there any evidence that actually something has started in America, that there's some infrastructure popping up around the place?
So we've seen more money put into chip factory construction in the past 4 years, kind of leading up to the passage of the CHIPS Act, when folks thought, hey, this subsidy package might be coming. And of course, after its enactment and during its implementation, then we saw in the 2 decades before that. So companies are absolutely committing real money to these construction projects. But they also need to wait and see market conditions before they decide when and how and at what level to fully build out their projects. You see companies make commitments to 1 fab or 2 fabs, but they have sites that could accommodate 8, and that of course depends on customer demand. But in terms of the construction process, that's where the permitting stuff really comes into play. And so for companies that have been waiting to secure environmental permits or have been going through that process alongside actually putting shovels in the ground, this could be a really big deal in giving them confidence of their construction timelines for projects that in many cases are already well underway.
Bloomberg's Mackenzie Hawkins with the latest on the flow of dollars from the CHIPS Act. Thank you very much. Now, as Mackenzie discussed, Intel is one of the chip companies that's pledged to invest billions into US chip capacity. But the top story for this industry right now is reports that rival Qualcomm has approached Intel over a friendly takeover. And Bloomberg reporting that money manager Apollo has offered billions of dollars to Intel in an equity-like investment. The stage is set. What happens next? Let's discuss with Phil Drury, Head of Technology and Communications Investment Banking at Citigroup. When I woke up on Monday morning, I was still recovering from the weekend, where I was recovering from Friday, in a headline where one of the biggest chip makers, Qualcomm, it's reported would go in for Intel. In this environment, does that deal happen?
Well, you probably won't be surprised that I'm not going to comment specifically on the deal. What I would say, Intel has a storied history dating back to 1968. They've got a collection of phenomenal assets. The company is clearly going through a transformation. Pat and his team have been pretty clear in the plans that they have outlined, including some significant capex reduction. What I would say is I'm not surprised that there's speculation around a number of interested parties, whether that be strategic or whether that be private equity, who is looking to invest quite meaningfully across the whole artificial intelligence ecosystem, which we've already seen. And we've already seen Apollo obviously work with Intel
I reiterate as well
in Ireland.
that neither Intel nor Qualcomm commented on that reporting. Right. And the other piece of reporting was Apollo, which has an existing relationship with Intel, and again strategic in the sense that they had co-invested in a specific project. Why is an Intel attractive to a name like Apollo? It is a duration bet. It's infrastructure. You know, in the world of AI, it's building something physical and waiting for the payoff later.
Yeah, look, I think this is long-term generational investment. Funds like Apollo take an extremely long-term view beyond the more of a short-term nature of the public markets. And when we look at M&A and the trends that we've seen over the last year, M&A activity is up quite meaningfully off two very low years in 2022 and 2023. And we're seeing strategics much more active, right? Citi advised on AMD and ZT Systems. We advised on IBM and HashiCorp. So not as transformational necessarily as Intel as we're talking about, but we're definitely seeing strategics be more proactive with as it relates to growth vertical adjacencies. Where we've seen private equity most active year to date is on dislocated public market valuations. What we haven't seen so far is the huge number of private companies with high watermark valuations in 2021 starting to come to market. But time results in valuation compounding, and that's where we do have high expectations for 2025 and 2026.
And it's already happening, Phil. Today, news of one of the biggest take privates in the software area. We've got Blackstone Vista Equity making a $8 billion take private offer to a company called Smartsheet. Is that the sort of software long-term revenue that they want to be digging into? Where do you see other opportunities in the take private field?
Yeah, I think, Caroline, that's exactly spot on. We anticipate that we'll see more of this. I think that artificial intelligence embedded on 2 years of data points in enterprise software is going to start to become really, really interesting. When we think about the first quarter of this year, the AI investment boom, if you will, focused on hardware, focused on chips, and actually we saw a weakness in software. That weakness driven by a diversion of enterprise funds towards AI. But now we're starting to look forward. We've got more data points, and we're starting to see a pickup in activity for enterprise software with embedded AI and how that can really be a catalyst for enterprise. So I think you're spot on. I think we'll see a lot more of this in 2025 and 26. Yeah. And we'll start to see that private supply come to market as well, which is held off for now because companies were very well capitalized. Private equity hasn't had to do anything, but now there is some pressure around DPI, and I think we'll see a more vibrant sell side as well as an active buy side.
That sort of pigeonholes the positive side of making deals and taking private. There's the negative side of stressed assets. I mean, almost Intel might be that story, but we're looking today at Liberty Broadband, of course, key billionaire Malone trying to piece together some of his stressed streaming and cable assets. I'm looking at Liberty Broadband and Charter Communications seemingly getting towards some sort of merger deal here. Are we going to see more of that? Mergers because they have to survive because of industry pressure?
Look, I think you'll see combinations for sure. I also think you'll see companies looking to carve and split and break out very valuable assets as well. There's no doubt we're in a moment of time driven by AI, which is causing corporations to look and reflect about how they're going to crystallize and maximize the valuation for their companies. That can result in adjacent combinations, but it can also result in illumination of value through carve-outs, through split-offs. We've not talked about activism, but we think this will be a theme that activists will focus on over the next couple of years as well. We're definitely going to go through change, and we're going to go through change through a greater sense of certainty on the geopolitical. This year has been a year of transition, more elections than we've ever seen in the past. Obviously, we've got a big one coming up. We will have a lot greater certainty on both the macro and the geopolitical when we get into 25 and 26. So yeah, I believe we're going to see more activity for a host of reasons.
You mentioned AMD and ZT. What was the other one that you mentioned that you advised on? There was a second deal.
IBM and HashiCorp.
What is unique to both of those is they got done. Yes. And so I know you won't comment on Intel and Qualcomm, the idea of, but in the context of what happens in November, antitrust, in this environment, do deals of that scale on paper, Intel and Qualcomm, proceed?
Well, the data is going to show a mixed bag of results, right? We also advised on the Broadcom VMware deal, which went through. Obviously, Microsoft Activision went through, but there are examples of deals that haven't gone through. What it means is just, look, there's a lot of focus, a lot of preparedness that's going on early on with advisors and corporations in terms of how certain can we be with regard to global antitrust decisions. Citi's well positioned there. We're operating in 160 countries. It gives us a good global spotlight on how regulatory bodies are going to react. But you're right. All you can do is build in contingencies early on in case deals break. But it can be a distraction when M&A is announced and it takes 12, 18, 24 months to complete.
Sometimes the lawyers always win. Phil Drury, thank you. Head of Technology and Communications Investment Banking at Citigroup. Coming up, Roku remains loyal to the hardware that put the company on the map. More on the company's streaming ambitions. Ed?
And I actually want to go back to Liberty Broadband. We mentioned it in that conversation, but the specifics are that Liberty went back to Charter with a counter offer, and that's kind of what's pushing up the shares 27%. I'd also point out, it's a big move, but Liberty is a company, the carrier that you also pointed out, has been under a bit of pressure. The stock down significantly over a period of time. This deal, pretty dry one actually in truth, but it's one the market's paying attention to this morning. This is Bloomberg Technology. Roku says the company remains, quote, very committed to its set-top boxes as it unveils a new faster version of Roku Ultra streaming box. This even as the electronics industry shifts to smart TVs with built-in streaming tech. For more, Bloomberg's Mark Gurman joins us now. I find this story so interesting for two reasons. I have a Roku TV still, believe it or not, alongside a Samsung smart TV. But that sort of set-top box is such a small part of their business, they're keeping it going. Why?
Yeah, the set-top box is a very interesting thing for Roku, right? That is their namesake. That is how they made their money. That is how they developed into a brand. Now for them, it's two things. One, it's all about content. That's their platform business. Two, it's all about integration of the Roku operating system into TVs you buy off the shelf at Target, at Best Buy, at Amazon, you name it. But the set-top box is still interesting for them, right? They don't make a ton of money off these things. They cap out at $100 per piece, and they're money losers. But they believe it brings content, which they're making a lot of money off of, including from advertising, into more people's homes. And it's a lot cheaper for consumers to get into the Roku experience, to get into the smart TV experience if they have an older TV by buying one of these $100 boxes versus going out and buying a new several $100 TV, right? there's a lot of overlap between the experience you get from a set-top box and a smart TV. One just requires you to buy the whole TV. The other requires you to just plug a box into your HDMI port.
We're looking at one-year chart of Roku. We now move to an intraday, but it has been under pressure. The earnings haven't been pleasing investors. Is this part of drumming up support from the investor base?
They've been suffering. I don't think the investor base is entirely happy or fixated on the set-top box business. I think if you're investing in Roku at this point, it's because of the content business, the advertising, the platform, the integration into smart TVs and other products. So this is a bit of moving away from that focus that I think investors are wanting to see. But at the same time, this is a cheap way to bring more people into the ecosystem and gather more support for its platform and more users there, right? The majority of sales at this point are via first-party and third-party smart TVs, but adding more people to the user base, more people that can be exposed to Roku content is not necessarily a bad thing. Just the hope for investors is this doesn't take away from the core competency that is the thing actually making the company money.
Mark Gurman, we thank you. Let's talk about Google now. It says it has seen faster progress in artificial intelligence as a result of a closer collaboration between its cloud computing unit and its AI research lab. Google Cloud struck deals to weave its latest AI models into popular consumer products, sharing more than 75 customer stories, one of which was the social app Snapchat, which will start using Google's generative AI model to help power Snapchat's AI chatbot. Bloomberg's Aisha Counts joins us for more. So they had a deal with OpenAI, but they started leaning more into Gemini, it seems like?
Yeah, so Snap originally released their chatbot just last year, and it started off using models from OpenAI, as you mentioned. The reason they also started testing and using Gemini is because when you go on Snapchat, a lot of the time you're communicating through videos or images, and they felt like Gemini's models were really good at doing that and being able to do images, videos, and text all at the same time. So that's why they started using Gemini as well.
So I think I'm right in saying you were at Snap the other day and you've kind of seen the latest gen of hardware from them. And this is heating up. Like Meta, it was a surprise story that at least the Ray-Bans and your interaction using a voice-based AI assistant would take off. You know, I've had experience with it. How real is this for Snap? Like, do they really think this is going to be the future for them?
I think they do. I mean, they're spending a lot of money, right? They are supposed to spend up to $1.5 billion, I believe, this year, which is about half of their expenses on things like infrastructure to support all of these new tools. If we're thinking about artificial intelligence, augmented reality through glasses, machine learning, all those sorts of things, they're really doubling down on this. So if you think about AI, it's not just a chatbot, but it's AI in the glasses, as you mentioned, and it's AI, obviously, to rank and recommend content, to create new experiences. So they're really betting on this as a key part of the company and a key part of their future.
Bloomberg's Aisha Counts all across the Snap story. Thank you very much.
Time now for Talking Tech. First up, writing assistant software maker Grammarly has announced it's adding a new CFO and CTO, bolstering the AI startup's management. Now, according to Grammarly, both new executives actually assisted their previous companies in the IPO process. Grammarly is currently valued at $13 billion. Plus, Boeing, well, it bumps up its pay proposal to striking workers to 30%. Now, that's sweetened from the 25% rejected earlier this month, but still less than the 40% sought by the workers' union. Boeing said the terms of the pay proposal are final and valid till the end of the day of September the 27th. And TikTok will be shuttering its music service in November, ending an experiment to compete with Spotify and Apple that started back in 2019. In a statement released, TikTok Music will be shutting down on November the 28th, and customer data will be deleted. Ed, what have you got?
Another news story, Elon Musk and his social platform X lost a legal fight over unpaid severance to a former Twitter employee who was laid off when Musk took over in 2022. Now remember, back in July, X defeated a lawsuit alleging that at least $500 million in severance pay was owed to about 6,000 laid off employees. Let's discuss with Bloomberg's Multi Nayak. Long story short, about 2,000 employees said that they were shortchanged when they were let go. We spoke to some of them, like over the last couple of years. What are the specifics of this case?
So this is happening separate from the court proceeding in that this is happening in arbitration behind closed doors. So this was a private arbitration proceeding. And as you said, there are more than 2,000 employees who have brought complaints against the company, but they have proceeded in arbitration and are fighting against the company. So now we received actually last week the first ruling in one of these arbitration proceedings, and looks like it was a win for the worker, and there are thousands more of these complaints that will still be arbitrated, but 15 cases we know so far have been arbitrated, and we're waiting for rulings in other cases as well.
How seismic is this one-off ruling? Will it force ultimately for X to settle in a broader number?
Of course, it definitely is a good sign for the employees because, one win could lead to more wins, and that potentially allows their attorneys to, sit across the table with Twitter and Musk and say, hey, listen, we're winning all these cases. Maybe it's just easier if we just settle this and get done with this dispute once and for all. So it's definitely a good positive sign. And, this is the first of many cases. And now that, we are seeing the first ruling being a positive one, it is possible that this sort of trend will continue for the other arbitration proceedings as well.
Malti, if it's the first of many, would you take us into the sort of mystery world of technology severance disputes? There are many people interested in this, right? The lawyers are incentivized to get their clients some pay. I remember the early days of Musk taking over and just the chaos in some of the chat forums of what was happening. What's it like covering these?
Oh, yeah. So, this particular arbitration proceeding is happening closed doors. So, unfortunately, I wish I could be a fly on the wall, but I can't. I'm not allowed to, enter. But just in talking to attorneys, these are very, very sort of different from court proceedings in that, the rules to gather evidence, all of that tends to be a little different. But, it's just very, very private. We don't get to, and even this memo that we got, Kurt Wagner, our tech reporter who reported this story with me, our sources shared a memo, and that's how we got to know about this ruling. So we never know unless the attorney sort of went to court to enforce the ruling. So so all of this happens closed doors, but in court, when we do have these disputes, of course there's a lot of drama, and if they go to trial, you get to see a lot of inside information about what happened behind the scenes in terms of the chaos that happens behind the scenes at these companies, and all the different players that sort of maybe made decisions that potentially may have hurt the employees. Sometimes the employees could also share how they feel about how they were shortchanged.
Malti, gotta go. Bloomberg's Malti Nayak, thank you. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. If you're just joining us, one of the big stories in technology today is the US-listed shares of Chinese technology companies. The news is the Chinese government coming with a big stimulus package to kickstart the economy. So you see e-commerce names like JD.com, Alibaba doing really well. But at the index level, the Nasdaq Golden Dragon Index now on track for its best day since January of 2023. Let's head out to Bloomberg News reporter Henry Wren, who's in London and covers China tech stocks. And some of these names have underperformed year to date. Recently, Henry, they've rebounded, but a big stimulus package that helps the Chinese economy will help some of China's tech sector as well.
Yeah, indeed. What we see today is Chinese authorities really made a concerted push to help boost the economy as well as stock market. These stimulus measures can be seen in three buckets. One is providing more liquidity to the economy in terms of cutting rates, lowering banks' reserve requirement ratios. Second is about helping the housing market, including lowering the mortgage rates for existing mortgages. And the third part, which is probably the most eye-catching funding part is about providing direct liquidity support to the stock market. The central bank has pledged 800 billion renminbi of initial liquidity, and it has said that it's considering in terms of providing a stock stabilization fund. So all those measures putting together really help boost investor sentiment in terms of Chinese internet stocks that we've been seeing today.
Ed?
Why e-commerce? Why those names JD and Alibaba doing so well, Henry?
Yeah, because as we know that all those Chinese internet companies as well as those e-commerce companies have been highly related to China's consumer spending, and we've been seeing them under quite heavy pressure recently given the China's economic slowdown. We've been hearing those companies executive talking about China's macro pressure, being PDD, being JD, being Alibaba. For example, Alibaba's e-commerce business just grew by single digit in the past quarter, as well as the value champion PDD, for example. It was a stock market darling, but in August, it issued a profit warning and said that growth has been slowing, it needs to be investing more, competition has become more intense. So we see the stocks really under pressure, and those stimulus measures could be seen as the first step if the authorities is getting more serious in terms of boosting the economy.
Henry, we know these companies so well here in the United States too. They have global pushes. Temu, for example. How much are their revenues still so focused on China, or how global is it becoming?
Yeah, it really depends on companies, right? So when we are talking about PDD, for example, like it has a big global push in terms of expanding to US market, European markets for its Temu brand. However, for that international business, it's under pressure as well because the US government is having its new rules in terms of curbing those cross-border small package shipping as well. So the domestic market, the local market is really key for those companies. Even though Alibaba has its, international push as well, the local market is still key because the Tmall and Taobao business for Alibaba, for example, is still about 2/3 of its revenue generation. So the local really matters, and what we've been seeing today in terms of the stimulus measures really helps the investor sentiment.
What's the next catalyst then, Henry? How much are people saying you continue to buy?
On the fiscal side, I would say, so we've been seeing lots of measures on the monetary side, for example, in terms of cutting rates, in terms of lowering down payment ratios or cutting rates for existing mortgages. But on the fiscal side, it's people what really cares about, because the problem with China's economy is not just about lack of liquidity in the economy. It's about lack of consumer demand. It's about weak consumption among Chinese consumers. We have the national holidays coming up, and it's really about how to help Chinese consumers to buy more, to shop more. So the focus for investors next is really about on the fiscal side, whether the fiscal policies will come through as well.
Henry Ren, thank you very much indeed. Meanwhile, in the political sphere, former President Donald Trump has been discussing China, accusing the nation of failing to honor a deal to buy $50 billion worth in U.S. agricultural exports. Trump vowed to raise the matter with the Chinese President Xi Jinping if the Republican nominee returns to the White House. Both Trump and Kamala Harris vowed to take a tough stance against Beijing, Ed.
Meanwhile, the UN General Assembly is in full swing in Manhattan, and China a key discussion for President Biden in his address. Let's get a read on where things stand with Bloomberg's national security reporter, Nick Wadhams. And Nick, President Biden was speaking just ahead of this program starting. What did he say, particularly in the context of the things that we care about here, technology, AI, and anything relating to national security?
Well, I mean, what you saw really was this is sort of a valedictory address for President Biden. A big thing he said was, listen, don't cling to power. Sometimes you have to do what's right for your country, and remember that you serve the people, not yourself. So a bit of a shot across the bow there. It was interesting. He did feature AI pretty prominently in his speech. It was mostly a look back, but really one of the few places where he actually looked forward was saying AI has a lot of promise, but there are inherent dangers to it, and essentially seeking a cautious approach. But But, the big thing here, the message that he may not want to send, but that is sort of inescapable, is the fact that he's going to be off the stage, literally and metaphorically, in just a couple months. So there's not a lot he can say to look forward, given, the uncertainty around who's going to succeed him as president.
Let's talk about what, therefore, Kamala Harris has been saying in recent days at fundraisers here in Manhattan as well about AI and wanting to foster it around crypto. And it's interesting, it's not just world leaders in town. Elon Musk is in town. He seems to be getting an award from the Italians. There's also Sam Altman at an event with him last night, and he's speaking with Secretary Blinken about regulating AI. So are we hearing much more about the discourse of governance of artificial intelligence this week?
That's a really big theme this week, in part because what you've seen is Secretary General Guterres is basically saying, listen, we are not able to make any progress on any of the issues that the UN was founded to help with, so peace and security. So what we're going to do is try to stake a claim on issues that matter for the future, AI and climate. But of course, the big challenge there is the UN can say what it wants. It has no enforcement mechanisms. This will all have to come through national laws. In fact, it was one of the big things he did last week. Guterres said, listen, we got to not use AI in military targeting. This is just crucial. But all the evidence we're getting is that countries with the ability to use AI in that way are doing so. So already you're seeing a situation where the U.S. and other countries, Israel, for example, are essentially disregarding these UN warnings, and it is still just very early days.
Nick, you've been at this a long time, respectfully, in China first and then DC. In your experience, what tangibly comes out of these weeks? I know a lot of tech CEOs, they're meeting with world leaders. So what? Explain to our audience the substance of it.
Right. So, the big thing on UNGA is you really should not focus on what's actually happening at the UN. There are speeches. You can get a sense of the mood, prevailing trends, things like that. But where you really see the action is on the sidelines, the bilateral meetings, the backroom deals, the hotel conversations. As Caroline mentioned, Musk is here. Sam Altman is here. World leaders are going to swing states in the U.S. after they're at the UN, trying to sort of figure out, get a sense for the horse race of what's going to happen in the future. So you may see some backroom conversation around a potential Ukraine peace plan that Zelensky's putting forward, conversations with Iran, stuff like that. But it's really not focusing on the UN, but looking at the networks that these leaders are trying to build out with tech titans like Elon Musk and Sam Altman, and that's really where the action is.
Bloomberg's National Security, bringing us tech. We thank you. It's Nick Wadhams. Coming up, we dive into the world of AI investments with Kathy Gao, Sapphire Ventures partner. Ed, what are you looking at?
So going to break, we're watching shares of Bank of New York Mellon moving closer to rolling out custody services for the Bitcoin and Ether held by ETF clients. This after a review enabled the company to avoid treating the assets as a balance sheet liability. This is Bloomberg Technology.
Analytics is said to be considering filing for an IPO as soon as November to raise $500 million. That's according to sources. Known as India's first AI unicorn, the company is seeking a valuation of some $3.5 billion in a share sale. Discussions are going on at the moment, and the size of the IPO and its timing could change. Ed.
There's certainly one to track. Okay, it's time for VC Spotlight, and we will talk about investing in AI. Sapphire Ventures announced last summer their commitment to AI by investing more than $1 billion in AI-focused enterprise startups. Kathy Gao of Sapphire Ventures joins us now. $1 billion is a commitment. I guess the easiest place to start is how did that go, and how did you go about deploying the capital?
Yeah, absolutely. First of all, great to be here, Ed. Sapphire Ventures, we're focused on investing in B2B companies at the mid to late stage. So we're really looking for companies with product market fit, are generating revenue, and that are proven businesses. With AI, there's been so much innovation, and there's been waves of adoption. So what we saw really was in 2023, it was a year of experimentation. This year, 2024, was a year of ROI validation, and people actually starting to play with these tools and getting use out of it. And we believe that next year, 2025, 2025 will be the year of widespread enterprise adoption. Now, that being said, we've been very active in 2024 and have made several AI investments already.
I sense some sort of tension out there, maybe between the venture capitalist and large tech companies that are making very similar investments, or they're developing technology themselves. And one of your historic portfolio companies is MuleSoft. Bear with me, but I picked that case study because ultimately Salesforce went on to acquire MuleSoft. It was an interesting exit, right?
Yes.
How do you find that next kind of MuleSoft type company, but in the AI context?
I think this conversation is so interesting when we're talking about Gen AI companies, right? In many ways, the incumbents, whether it's Salesforce, Microsoft, Amazon, you name it, they're all actively investing in young AI startups because they're trying to ensure that their future will have AI in it. As an investor, what we look for closely are companies standalone that we think are amazing businesses and can go all the way to IPO, but we also consider other exit paths, including to M&A. So we pay a lot of attention to companies that we believe hold strategic real estate for many of the large tech players.
Kathy, what are the valuations like in the space that you're trying to put money to work? You say you've done a couple of deals in 2024 already. Are they high?
That's a great question, Caroline. The short answer is yes. The reality is that AI is so consensus right now, which arguably means it's a really difficult time to invest because the valuations are so high. So if a perfect deal, that means a perfect valuation. I think our approach and my approach at Sapphire is you have to take a differentiated approach to investing. And because AI, it's still in the early stages of manifestation into different types of companies, you have to take a leap of faith on some dimension. So for me, for example, the leap of faith that I'm taking, which is based again on data and research, is that industries that have historically been technology laggards in terms of adoption are now going to adopt technology en masse. So two examples are a lot of different verticals, right? So manufacturing, construction, healthcare, legal. These are companies and industries that are still operating on pen and paper and on mainframe computers. And the second one is really small businesses, the backbone of the U.S. Over 80% of U.S. businesses are companies under 10 people that have historically not been able to research the latest and greatest when it comes to technology.
I love what you said before about the validation. We're currently at the point where you have to validate the return on investment. I don't feel like we've had that yet. And I'm wondering whether you're seeing it in the startups you've backed and how you're measuring it, Kathy.
That's such a on-point question, Caroline. I think we've already started that phase. I'll give you an example. Sapphire recently backed Elise AI. I know Minna was on the show a couple of weeks ago. That was a Series D company. What Elise AI does is owns the entire conversation end-to-end between a prospective tenant or tenant and a residential building. A lot of their customers are sophisticated residential real estate companies. They do a lot of internal benchmarking. They don't just trust Elise to show their own benchmarks. They actually do it in-house, and the data shows significant improvements in accuracy, significant improvements in actual results, including customer satisfaction.
Some of the news of late has been OpenAI's big primary at a very high valuation. Yes. Then reports about Anthropic getting itself organized. And one report I spotted was that the minimum check for the OpenAI round, as an example, is $250 million. What's the trickle-down effect of that for you?
Can you explain that question a little bit more?
Yeah, so everyone's clamoring to get into very small concentration of names, including through SPVs.
Yes.
Does that kind of open up the field for you to sort of have access to more startups where people aren't paying attention? Or is it just that you kind of have to say, oh, do I need to be involved in this round, even if it's a stretch for me at growth stage?
Great question, Ed. Look, at the end of the day, as investors, it's our jobs to allocate capital in our fund construction. And that means thematically what we invest in. There's always going to be great deals out there, but we have to find the best use of our capital based on our strategy. So I think it's a great thing for companies like Sapphire, right? Other investors are busy chasing these mega deals in these ultra late stage companies, or they're going super, super early, hypey AI companies that may not have a lot of revenue. That leaves more greenfield for companies like Sapphire that, again, are focused on that mid to late stage company proven. And by the way, it's not just AI. There's plenty of amazing companies out there that aren't Gen AI native companies. And if more investors are looking only at AI, I say that's great for us.
Okay, name one that isn't to do with generative AI that has been exciting to be able to get into or at least analyze.
You know, I think one interesting way to play the broader Gen AI strategy is to think about companies that are leveraging Gen AI for themselves. So I'll give you an example. Medable, which is a Sapphire portfolio company, is a software platform that allows clinical trials to be performed in a decentralized manner. It's not a Gen AI native company, but they're actually actively using Gen AI technology to vastly improve implementation time. So Medable is working with the largest life sciences companies in the world, and implementations can take a long time because of the complexity. But now converting a 1,000-page trial document in a way that is automated and someone without technical expertise can set it up is a game changer.
Kathy Gao of Sapphire Ventures, thanks so much for joining us.
Thank you so much.
Meanwhile, look, AI is here to stay, we know that, and it can't happen without nuclear, apparently. It's according to the Constellation Energy CEO, Joseph Dominguez. These comments coming after the company decided to reopen that nuclear reactor in Pennsylvania, with Microsoft agreeing to purchase the energy for 2 decades in order to power the AI boom. The Constellation CEO sat down with Bloomberg's Katie Greifeld yesterday to talk about the deal. Let's take a listen.
Earlier this year, we started talking to Microsoft about it. We had partnered with Microsoft on different products before, so they made sense as a client. Of course, they have the need.
So the relationship was there, and of course we see the culmination of that now. I'm curious, I mean, when it comes to the nuclear industry, you have bipartisan support. You read a lot of academics and, other thought pieces that nuclear just makes so much sense, but there's still that reputation cloud, if you want to call it, hanging over it. I'm curious, when you think about the industry now versus when you were spun out of Exelon in 2022, how has it changed?
Oh, God, it feels like 10 years, right? It's really 31 months that we have been, and back then the thought was, there wasn't going to be a catalyst. It's always one of these things where, in retrospect, you think the pieces are coming together. Electrification of the transportation sector, home heating, industry. We're onshoring a lot of industry now to deal with supply chain issues. But AI was the thing that just really drove the load projections to a point where you said, without nuclear, it's not going to happen.
Let us head to the Bloomberg Philanthropies Earthshot Prize, which is happening right now on the sidelines of the United Nations General Assembly. Bloomberg's Alex Steele, Damien Sassara join us, and it is all going on at the Plaza Hotel today, Alex.
I have to say, this is quite a setup here at the Earthshot Summit at the Plaza Hotel. This is sponsored, as you mentioned, co-hosted by Bloomberg Philanthropies, but the whole goal is about trailblazing solutions and innovators to help our planet. Then later on today, there's also going to be the Global Business Forum, where you have Bloomberg Philanthropies teaming up with the World Bank and the IMF to kind of go through some of the big topics of our time. And in that is most definitely going to be AI and how to globally regulate that. We heard from President Biden earlier at the UN talking about the AI security and how to help that conversation on a global level. And Ruth Porat will be speaking with Eric Schatzker later on today, the president and CIO over at Google. And Damien just kind of got stuck in here from radio, but he kind of dug it. He was into it.
Central banks, ambassadors, heads of state. I mean, it's all happening here. And what's interesting is we're talking to people like the European Investment Bank. We're talking to the Monetary Authority of Singapore. We're getting a sense of how they're financing sustainable development, how they're financing climate change solutions. And it's really an unbelievable vibe here, Alex. I'm just happy to be here.
Yeah, and everyone's really positive, obviously, guys, in terms of the financing and the technology, but the real information kind of comes out on the ground. Like, can companies really make a return when they go green, and where and how do they do it, and what that long-term outlook winds up being, guys?
Money talks. Bloomberg's Alex Steele, Damien Sassar, loving the energy. down there. Thank you so much. Meanwhile, that does it for this edition of Bloomberg Technology. Clearly, some key conversations still coming up later today, Ed.
Yeah, don't forget to recap on the podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.